Welcome back to the deep dive. Ready to get up to speed on Kotak Mahindra Bank?
Let's do it.
We're going straight to the source for this one, their Q3FY25 earnings call, fresh from last Saturday.
Straight from the horse's mouth.
Now get ready for some financial intrigue.
Uh,
Yeah, because this earnings call had it all: regulatory hurdles, whispers of an economic slowdown,
oh,
and even a touch of optimism for the future.
interesting.
Let's dive in.
So what makes this call particularly interesting is that it took place against this backdrop of, unique challenges for Kotak Mahindra, specifically this ongoing technology embargo imposed by the RBI back in April 2024.
Yeah, this embargo is a big deal. And you hear it pop up throughout the call. You'll hear the CEO, Mr. Uday Kotak, expressing cautious optimism about progress made and the hope for a lift on the ban soon.
Right, and if we connect this to the bigger picture, the RBI's embargo is essentially a restriction on the bank's ability to issue new credit cards and significantly hampers their ability to expand their digital banking platform 811.
It's a tough spot to be in. But despite this hurdle, Kotak Mahindra Bank still delivered some impressive results this quarter. We're talking strong consolidated profits, substantial growth in customer assets and deposits.
And a stable net interest margin.
Exactly.
They reported a consolidated profit of 4,700 crores. That represents a 10% year-on-year growth. Customer assets are also up 15% to a staggering 5.19 lakh crores.
Those are some pretty impressive numbers. It makes you wonder how they're managing to pull this off with the embargo in place.
It's interesting how they're turning this challenge into an opportunity. Mr. Kotak highlighted the launch of new KO and 811 apps, complemented by Neo and Cherry.
Okay.
They've also been busy digitizing and automating customer journeys, all while, working with the RBI to meet their requirements.
So they're using this time to refine their tech strategy and improve their offerings. That's pretty savvy.
Absolutely.
But what about the economic slowdown everyone's been talking about? Did the CEO address that at all?
He did. Mr. Kotak acknowledged a possible slowdown, but emphasized their strategy to grow in line with GDP while managing risk. They're targeting growth at 1.5 to 2 times nominal GDP growth, which suggests a measured approach to expansion.
Right, a pretty balanced strategy given the uncertainty. But does that mean they're pulling back across the board?
Not necessarily. Their investment banking and capital markets businesses performed exceptionally well this quarter, demonstrating the benefits of their diversified approach. They're not putting all their eggs in one basket.
That diversification is definitely paying off. Now let's talk about credit quality. That's a key indicator for any bank.
Absolutely.
And they seem to be maintaining a strong focus on secured lending.
Yes, and it's paying off. Within their loan portfolio, we see some interesting trends. Secured assets are performing well, driven by strong growth in mortgages and business banking.
Okay, but what about unsecured lending? There's always more risk there.
True. Unsecured lending presents a mixed bag. Personal loans are showing signs of improvement, while credit card stress is plateauing. Though growth there, as you might expect, is hampered by the embargo. Unfortunately, microfinance is showing some cause for concern, with rising delinquencies becoming apparent.
You mentioned personal loans are improving. Did they elaborate on what's driving that trend?
The CEO mentioned that they tightened underwriting norms for personal loans over a year ago, so they're being more selective about who they lend to. It seems to be paying off with improved flows and collections.
That proactive approach to risk management is certainly reassuring. But what about the microfinance sector? What's their plan for addressing those rising delinquencies?
Yeah, they acknowledged the rise in microfinance delinquencies as a concern,
Okay.
pointing to a combination of factors. They mentioned extraneous economic factors like the slowdown and some structural changes within the microfinance sector itself.
Mm-hmm.
It seems they're proceeding cautiously, pulling back disbursements in some quarters, and closely monitoring industry trends.
So they're not ignoring the problem, but they're also not panicking. That measured approach seems to be a recurring theme for them.
Absolutely. Now, shifting gears a bit, let's talk about costs of funds and margins.
Okay.
It's a challenging environment for banks right now,
For sure.
with rising interest rates and intense competition.
So how is Kotak Mahindra holding up on that front? Are their margins being squeezed?
Well, despite the challenges, they've managed to stabilize their net interest margins. A key factor here has been the recent cut in the statutory liquidity ratio rate, which has helped to reduce the cost of borrowing for banks. Additionally, they've seen significant growth in low-cost deposits, particularly current accounts, and their active money product.
Hold on, what exactly is active money, and why is it such a big deal?
It's a smart product, really. Active Money allows customers to seamlessly sweep funds between their savings accounts and fixed deposits. What this means for the customer is they earn higher interest rates while maintaining liquidity.
Gotcha.
What it means for the bank is they get a cheaper source of funds. It's a win-win.
That's brilliant. No wonder they've seen such impressive growth in that product.
It's been remarkable.
They mentioned a whopping 36% growth in active money, which is pretty incredible.
Yeah,
So they're attracting low-cost deposits and managing their funding mix effectively.
exactly. It's a testament to their ability to innovate and adapt to the changing market conditions. And this, in part, is why they've been able to maintain their net interest margins in such a tough environment.
Okay, so they're managing costs, innovating, and delivering impressive results despite the embargo. It sounds like they're in a pretty strong position.
They are. Now let's talk about their strategic outlook. Mr. Kotak laid out a bold vision for the future,
Okay.
aiming to position Kotak Mahindra Bank within the top 3 private sector banks in India in terms of profitability by 2030.
That's a pretty ambitious goal. How do they plan to achieve that?
They're pursuing a two-pronged approach, focusing on both organic and inorganic growth opportunities.
Okay, let's break that down. What do they mean by organic growth?
Organic growth refers to expanding their business through their existing operations, primarily by acquiring new customers and deepening relationships with their current customer base. They mentioned that they're focused on delivering a seamless and personalized customer experience, leveraging technology to make banking easier and more convenient.
Okay, that sounds promising. And what about inorganic growth?
Inorganic growth involves expanding through acquisitions or mergers. While they didn't mention any specific targets, they indicated they're open to exploring such opportunities if they align with their strategic goals and make financial sense.
So it sounds like they're covering all their bases in their quest to reach the top 3.
They are. But of course, the elephant in the room remains the RBI embargo.
Right. It's a major factor influencing their strategy, particularly in areas like credit card growth and the expansion of their digital banking platform.
Yes, the CEO expressed hope for a swift resolution to the embargo. But the ongoing uncertainty definitely adds a layer of complexity to their growth plans.
So what does all of this mean for you? We've covered a lot of ground, and it's important to distill the key takeaways.
Definitely.
Kotak Mahindra Bank seems to be navigating the challenging environment quite well. Their diversified business model is a strength, as is their disciplined approach to risk management and cost control.
Right.
They're making smart moves in their digital strategy, even with the RBI embargo in place.
Absolutely. And they're delivering impressive financial results
Yeah.
with strong profit growth and a stable net interest margin.
Absolutely. Now let's delve a little deeper into some of the specifics of their performance and strategic choices.
One thing that stands out to me is their ability to adapt and innovate, even under pressure. They've turned the RBI embargo into an opportunity to refine their tech strategy and launch new digital initiatives. What do you think about that?
It's a testament to their resilience and their forward-thinking approach. And it raises some interesting questions about how they'll continue to leverage technology in the future once the embargo is lifted.
We'll have to wait and see. But for now, let's continue our deep dive into Kotak Mahindra Bank's Q3FY25 earnings call. Let's dive into some specifics about their performance, starting with their loan portfolio. You might be surprised to learn that despite the challenges in the microfinance sector, their overall credit quality remains quite solid.
Yeah. Their gross non-performing asset ratio stood at 1.5%.
Wow.
And their net NPA ratio was even lower at 0.41%. Plus, their provision coverage ratio actually improved to 73%,
That's great.
indicating, they're being quite careful about setting aside funds for potential loan losses.
This is a testament to their focus on secured lending,
Yeah.
which, as we mentioned earlier, is really paying off. They've seen strong growth in mortgages and business banking, and these loans tend to be less risky.
So even though there are some concerns about microfinance, their overall loan book seems to be in pretty good shape.
That's right. Now, let's zoom in on a couple of areas that caught my attention, the commercial and wholesale banking segments.
Okay, tell me more about those.
On the commercial side, they highlighted strength in their secured business banking portfolio. They specifically mentioned strong utilization during the recent festival quarter, which is a positive sign for the economy as a whole.
So businesses are feeling confident enough to invest and expand, which is good news.
Yes, it is.
Yeah.
And they're also seeing continued growth in their unsecured business loan segment,
Okay.
although they're closely monitoring delinquency trends there, as they should be.
Right. It makes sense to be cautious, especially in the current economic climate. Now, what about wholesale banking? How are they performing there?
Well, they reported strong growth across their corporate, mid-market, and SME segments.
Okay.
They're acquiring new customers and deepening existing relationships by leveraging their extensive network and industry expertise to offer tailored solutions.
So they're not just relying on one segment of the market.
Right.
They're casting a wide net and serving businesses of all sizes.
Exactly. And it's clearly working for them.
Yeah.
Their transaction banking and flow business also saw significant growth.
Now remind me, what exactly is transaction banking?
Transaction banking involves facilitating payments and collections for businesses.
Okay.
Think of it as the plumbing of the financial system.
Okay, got it. And why is this segment doing so well for them?
Well, as businesses become increasingly globalized and digitalized, the demand for efficient and reliable transaction banking services is growing rapidly. And Kotak Mahindra is well positioned to capitalize on this trend. They've invested in the technology and built a strong reputation for delivering seamless and secure transaction banking solutions.
So they're capturing more of that market share and generating recurring fee income, which is good for their bottom line.
Precisely. Now let's shift gears a bit and talk about some of the specific details that were revealed during the Q&A session.
Okay.
The analyst has always had a lot of questions. What stood out to you?
I found it interesting that they, dug deeper into the bank's approach to managing risk,
Right.
especially with the economic slowdown looming.
That's a key concern for any investor, for sure. How did they address that?
Well, they emphasize their conservative underwriting practices,
Makes sense.
particularly in their unsecured lending portfolio.
So they're being more selective about who they lend to, which is a sensible approach in a potentially volatile environment.
Exactly. They also highlighted the importance of data analytics in making better lending decisions. They mentioned that they're using data to identify early warning signs of potential delinquencies and to tailor their loan offerings to better meet the needs of their customers.
That proactive approach to risk management is crucial in the current environment.
Yeah. The analysts also seemed quite interested in their deposit growth,
Yeah.
especially the success of their active money product. Do you remember those numbers?
Well, they reported strong growth in average deposits overall, with a 15% year-on-year increase.
Okay.
Their active money products saw a remarkable 36% growth.
Wow.
This product, coupled with the healthy growth they're seeing in current account balances, is helping them maintain a strong CASA ratio.
Hold on, you're using some banking jargon there. For those of us who aren't financial experts, can you explain what CASA ratio means and why it matters?
Of course, CASA stands for Current Account Savings Account.
Yeah.
The CASA ratio is essentially the proportion of a bank's total deposits that come from these accounts.
Okay, and why is that ratio so important?
Well, current and savings accounts are generally cheaper for banks to maintain than term deposits,
Gotcha.
which means they offer a lower cost of funds.
Okay.
A higher CASA ratio indicates a lower cost of funds for the bank, which can translate into higher profitability.
That makes sense. So the fact that Kotak Mahindra's CASA ratio is strong is a good sign for their overall financial health.
Absolutely. Now, another key highlight from the Q&A session was the discussion about their cost management efforts.
Yeah, they were quite proud of the fact that they've been able to control costs even in this inflationary environment.
Right, they mentioned that their operating costs increased by less than 1% quarter on quarter, which is pretty impressive.
Yeah.
They've also managed to keep their employee costs stable.
That's a major achievement.
It is.
Their cost-to-income ratio improved as well.
Yes, it dropped by 22 basis points compared to the previous quarter,
Okay.
which shows they're becoming more efficient in their operations.
Now let's talk about the performance of their subsidiaries,
Right.
which was a mixed bag this quarter.
Uh-huh.
Some businesses really shone, while others faced some challenges.
Let's start with the positive.
Okay.
Their capital market subsidiaries, Kotak Mahindra Capital and Kotak Securities,
Yeah.
both had exceptional quarters.
Kotak Mahindra Capital, their investment banking arm, ranked #1 in the equity capital market category
Wow.
for the third consecutive year.
That's an impressive feat, especially considering how competitive the investment banking landscape is in India.
They've clearly established themselves as a leading player in this space.
They attributed their success to their strong client relationships, their expertise in executing complex transactions, and their ability to seize opportunities in a favorable market environment. They've been involved in some of the largest IPOs and capital raisings in recent times.
And Kotak Securities, their broking arm, also saw robust growth with profits up 46% year on year.
They've been successful in attracting both retail and institutional clients by offering a comprehensive range of broking and investment services. Their focus on technology and customer service has been a key differentiator for them in the competitive broking market.
Now let's move on to their asset management company, Kotak AMC, which also turned in a solid performance.
Right.
Their profits continued to grow,
Yes.
driven by the strong performance of the capital markets and a healthy increase in their assets under management, which crossed the 5 lakh crore mark during the quarter, a major milestone.
Wow.
They've clearly resonated with a diverse investor base by offering a range of mutual fund products to suit different risk appetites and investment goals.
Strong portfolio.
So those are the high flyers.
Right.
But not all of their subsidiaries had such a smooth ride this quarter, right?
That's right. Their car finance business, Kotak Prime, did see growth in its asset base.
Okay.
But they also faced some margin pressure and higher delinquencies, particularly in their two-wheeler financing portfolio.
Yeah, those challenges are understandable given the broader trends in the auto finance sector.
Mm-hmm.
Rising interest rates and overall inflation make it tougher for people to afford vehicles and repay loans, especially in the more price-sensitive two-wheeler segment.
And competition remains fierce, with both banks and non-banking financial companies battling for market share.
So Kotak Prime will need to carefully navigate this environment to maintain its growth trajectory.
Absolutely. And then there's their business correspondent business, BSS Microfinance,
Right.
which operates in a segment that's facing significant headwinds.
Yeah, they reported a loss during the quarter, primarily due to lower disbursements and higher collection costs related to rising delinquencies.
The microfinance sector has been hit particularly hard by the economic slowdown,
Yeah.
as many borrowers struggle to repay their loans.
What's their plan for addressing these challenges?
Well, they're taking a cautious approach to this business, pulling back on disbursements in certain areas, and closely monitoring industry trends.
So they're taking steps to ensure its long-term sustainability
Right.
while staying committed to financial inclusion.
Exactly. And finally, their life insurance business, Kotak Life, turned in a profit for the quarter,
Okay.
demonstrating their ability to navigate volatile market conditions. Their robust solvency position, well above the regulatory requirement,
Yeah.
should also provide reassurance to their policyholders.
So overall, a mixed bag of performances from their subsidiaries.
Right.
But their diversified portfolio does provide them with a buffer against volatility
Yes.
and allows them to capture growth from multiple sources.
That's a key takeaway. Now, stepping back a bit, what are your thoughts on the broader context in which Kotak Mahindra is operating?
Well, the CEO acknowledged the possibility of an economic slowdown in India, which is something everyone's talking about right now.
It's a valid concern. Many economists are predicting a slowdown,
Mm-hmm.
citing factors like rising inflation and global uncertainty.
But the CEO also pointed out that there are pockets of strength in the Indian economy,
Right.
particularly in the capital markets, in certain sectors like infrastructure and manufacturing.
That's important to remember. It's not all doom and gloom.
Exactly.
And their investment banking and securities broking businesses have benefited from the buoyant capital markets,
Right.
while their corporate lending business is seeing healthy demand from companies investing in growth opportunities.
So it's a mixed picture,
Right.
with both headwinds and tailwinds, but their diversified business model and prudent risk management practices position them well to navigate this uncertainty.
I agree. They're being cautious, but remain optimistic about the future.